Welcome to DeFi Crypto today. Our topic today is what's happening with our demo portfolio. Last week, we started creating a demo portfolio where we wanted to be very, very conservative to try to protect our capital. And we wanted to earn interest on our investments that beat inflation. So what we did, we put 80% of the capital in stablecoins, and we deposited them on some protocols that earn us more than 7.5% because the inflation rate in the United States at the moment is 7.5%. So if we don't earn 7.5, we're just losing money because of inflation. So we need to beat inflation every time we invest. So we had to be very, very strict. I wanted to use the best possible, safest possible protocols out there. And for that, we use DeFi safety. We're going to have another look at DeFi safety today. But let's look at what happened to our portfolio, how it fared. Despite the fact that Bitcoin crashed again the last few days, it went down quite a bit. It went below 40,000 for the first time in a long time. And my feeling is that the general crypto market is probably going to be very bearish most of the year. Why? Because the Federal Reserve is going to try, in the United States, going to try to fight inflation by raising interest rates. And by raising interest rates, that increases the cost of borrowing money for investments, whether those investments are in crypto, on the stock market, or in physical assets such as real estate or factories for companies and stuff like that. So that will make the market very bearish. Okay, so we have to protect against the market going down and down and down and down and down this year because the Federal Reserve is expected to raise interest rates several times. They're going to start next month in March. So you can expect that the market is probably going to go down around the time when they're going to raise the interest rates. Sometimes it's before, and then it comes back up. Sometimes it's right at the moment they're announcing it, sometimes a bit after, whatever. But there's going to be an impact at some point on the markets. So we're using dbank.com here, those that are not familiar. And it's showing us our assets. So we still have our investment in Balancer and our investments in Yearn. Now, we started with 500. Now we're down to 486 on Balancer. And at Yearn, we're down to 475. So we lost a little bit. But we did not lose a cent in our stablecoins. As you can see, they're still set at 400. The only part where we had some losses were with the regular tokens that are not stable. Although these, in my opinion, are blue chip tokens. They're very good tokens. But we should be expecting that those tokens will go down. Okay, so if you don't want to any of your tokens to go down ever, then put all your money in stablecoin. If you want to try to get a higher return, you should have a small part. In this case, we're putting 20% of our portfolio in tokens that can vary in value. Okay, and they're also earning us more than our stablecoins in terms of yield. Okay, we're going to have a look at that again. Now, we're having the similar situation at Yearn. Our two stablecoin investments have not lost any money. But poor Curve lost about 25% of its value since last week. But again, Curve is an excellent project. It's got a very good safety rating that we're going to see again on DeFi safety. And, you know, it's the largest DeFi project in the world. It's around 10% like the TVL, the total value locked on curve, is around 10% of all DeFi. Okay, there's over $20 billion on this thing. Okay, it's huge, it's massive. Okay, so long term, I think it's a good value, despite the fact that we lost a little bit. So let's have a look directly on Balancer itself, so we can see what's happening there. So these are our two investments on Balancer. The first is portfolio of stablecoins. We've got USDC, DAI, Mymatic, also called MY, and USDT. These are 4 stablecoins pegged to the US dollar. Now, at the moment, we're gaining 9.74%. Last week was a little bit higher than this, but we're still beating inflation, so I'm not making any changes. If this rate would go below 7.5%, which is the inflation rate, then I would try to find a better place to put my money in. But again, always in stable coins. Okay? But at the moment, I don't need to change anything. It's following the rules I set up at the beginning. Okay? I want to have the largest part of my portfolio in stable coins, and I want to earn at least 7.5% to beat inflation. And right now we're at 9.74%, so we're beating inflation by a couple percent. And that's cool enough. And we're going to see how we're earning here also. If you look at this, what we got is we receive 0.38% in swap fees, and then we get 9.36% in liquidity mining. 7.08% of that is going to be received in BAL tokens, and 2.28% is going to be received in Chi token. Chi is the protocol that creates Mymatic. So we're getting rewards from BAL. BAL is Balancer, and from Mymatic as well. So we're getting bonuses, okay? And that's why we're getting such a nice APR. Now, the way it works at Balancer is that once a week, if you look here, your rewards accumulate here. And once a week, they airdrop them to your wallet. So they go into your MetaMask automatically on a Wednesday. So today's Tuesday, so I'm not receiving those yet. So on Wednesday, they're going to be dropped in my account. Now we can see how much value we collected so far. And so collecting about $1 a week right now. And it's normal. I mean, this is a really small portfolio. And the APR are not astronomical, okay? But we want to preserve our capital. And we want our capital to beat inflation. That's our basic rule, okay? And we need to follow that. Now, this one here gives us a much higher APR. So we're getting 9.32% swap fees and 16.28% liquidity mining APR. I'm not sure in what tokens we're getting them, though. That's not quite clear to me. But they might just be added directly into the pool. They're going to appear here at some point. So whenever those yields are generated, we receive them one way or another. Okay, they're not cheating us. Don't worry. This is the DeFi project with the highest safety rating of all DeFi. It's got a 100% rating. It's hard to beat that. Now we can look at what other portfolios are available. In terms of stablecoin, this is another stablecoin portfolio, but doesn't beat inflation, unfortunately. Though it's quite popular. There's a lot more money. There's twice as much money there than in the portfolio that we're using here. I don't know why, but that's the way it is. People like it despite the fact that the APR is much lower. I don't know. Don't ask me. I have no idea. So this is the other project we're invested in. And do we have anything else exciting in here? No, nothing. No other stablecoin portfolio available here. Now the thing is, if we see that the rates here drop too much, like below the inflation rate, then we could change for some of these projects that are yielding a lot more than inflation. Okay, so we always try to maximize our earnings. Now, we cannot control what the crypto market is going to do. If it pushes down Matic or Ethereum or BAL, we can't control that. What we can control is where we're depositing the money. And we cannot control if the APR is going to go down, but we can choose the APR we want at the moment. Okay? And we can change and move the money around any way we want. All right, it's enough for a balancer. Let's have a look at Yearn. Now, right away, I was a little bit concerned because it's telling us that my APY is down to 0%. So what the heck? So I went on the Discord and it told me, okay, let's see, check again now. Okay. It told me that there was a user interface error. Okay, so maybe I need to refresh. I don't know. It says check again. Some of it is fixed. Not all of it is fixed. But yeah, it looks better. So anyway, they seem to have worked on the user interface. And basically, there was a bug somewhere, and it didn't show the APY correctly. I think it's still buggy. I think, yeah, the MIM and the CRV rates ought to be better than 0%, I'm pretty sure. But anyway, I'll talk to them on Discord again and see if they can fix the rest. But it looks better already. So at least we know on DOLA, we're still beating inflation. We're still getting 70.06%. Now, what's nice here, it tells you how much you're earning, okay? So since last week, we earned 9 cents on the MIM, and we earned 23 cents on the DOLA, and we earned 5 cents on the curve, okay? Unfortunately, as I said earlier, we lost a little bit, lost almost 25% of the capital value on curve, but I'm not worried. Why? Because it's a very big and strong project. These things, the blue chips, okay, what I like to call blue chips, those are the best tokens from the best projects, okay? We talked about them. We've got Matic, we've got Ethereum, we've got CRV here, and others, okay? These are cryptos that I want to keep in my portfolio for the long term because they are essential to the crypto environment, the ecosystem, okay? If curve dies, most of crypto is going to follow. It's that essential, okay? It's the cornerstone of all stablecoins on crypto, okay? Remember a few years ago in 2008 when they were talking about Citibank and they said it was too big to fail, you know, during the banking crisis and so on. Curve is literally too big to fail. Okay, if Curve fails, we're in deep doo-doo. Okay, Curve is essential, and Curve is very well designed. Okay. It's an extremely sophisticated engine. It doesn't look so sophisticated when you look at it. The interface looks like it was designed on Windows 95. But under the hood, the coding is done by geniuses. Okay? It has very low slippage. Okay? It's extremely efficient. And it just works, okay? It just works, and it makes a ton of money. It makes a ton of money. So it's very, very good. All right, so I'm not too worried about this unrealized capital loss, okay? I think I'm going to keep the position there. Right now it's at 0%, but I'm pretty sure it's much higher. Last week was, what was it, around 20, 30%, something like that. So we're definitely earning something, even though the user interface shows 0 at the moment, okay? But yeah, that was just a bug. That was just a bug. Okay, so we're going to have another look here. When I was searching for the reason why we had 0% all over the place. I searched on first on the Yearn Finance Twitter, and I went down and went down and went down, and I came across this here, TEMPUS Finance. It says first integration with Yearn. So it's using Yearn to give you yield on stablecoins and also on the Wi-Fi, that's the Yearn Finance token. Okay, so you can obtain a high fixed yield on USDC, DAI, and USDT. Fixed. So you can fix your yield for a long period of time if you want to. So we're going to have a look at that. It says low gas fees, which is always nice. And it says here, go there to fix your yield. So we went first to the TEMPUS. I'm going to follow it and put a notification. I went here to their Twitter. So they repeat the same thing that we just saw. It's a new project, so there's not a gazillion dollars there yet. So again, be careful. It's a new project. Okay, it's not evaluated yet by DeFi Safety. However, it's been audited multiple times, and I'll show you that in a minute. So here they talk about the user guides and so on. So I invite you to read that if you want to know more about this project. We're just going to have a very quick look at it. Okay, I'm not investing in it at the moment. Maybe I will in the future, but not just now. Okay, so this is what the interface looks like. It's on Phantom, and you've got 4 vaults. Okay, so you've got USDC, DAI, USDT, and Wi-Fi. Here, it shows maturity of August 2022, June 2022, July 2022, and May 2022. So, and it says here, you've got a fixed APR up to 6.65%, up to 9.73%, up to 8.34, and up to 10.16. By far, this one has the best rate for, come here. This one has the best rate for stablecoin. So we click on this. Okay, how does it look? So we've got our fixed APR, future APR, future yield, pool ratio, capital yield, and so on. Okay. So right now, the fees are set at 0 except for swap. But there's no deposit fees and no redemption fees and no early redemption fees. So that's good. So it looks like the interest rate went up a little bit. That's what they're talking about here. This is the term. So it's from the 10th of February to the 24th of June. You've got 122 days remaining. And it looks like you can fix your interest at this. Okay. I don't think I've got any DAI in my wallet. No. So I'm not going to perform the operation anyway. But anyway, to me, it looks like an interesting opportunity. If you can fix the rate above inflation for a few months, like they're offering here, you got almost 5 months available. You know, that's a good thing. That's a good thing. You don't have to worry about the rates going up and down, up and down, and up and down. And now you know you've got a little bit of peace of mind. Okay, and these are stable coins, so that does fit into our portfolio strategy. So maybe next time I'm going to try put a small percentage of the portfolio on this. Maybe I'll move some money out of Yearn or out of Balancer or whatever, and I'll put a little bit in there. I'm saying a little bit because it's a new project. We don't know how safe it is yet. Okay. Now, as I said, those guys have been audited. This is their documentation. They had 3 audits so far. So with 3 audits, these guys are serious about security. Or should be. But they have not been reviewed by our reference. This is the reference that we're using for this portfolio. We're using DeFiSafety.com, and we're displaying all the projects that have been evaluated. This is the rating, the safety rating. We have Balancer, which has a 100% safety rating, which is the best. And we also have, so far, Yearn Finance, which has 93% safety rating, which is excellent. Now, I was looking for other places where we can put our money. And then I noticed that PoolTogether has a 91% safety rating. PoolTogether also allows you to invest in stable coins. And if we have a look at it, right now you can get 12.99%. Okay, this is the estimated average APR. They go up and down, up and down, up and down, but the estimate is that we're going to get 12.99% if we deposit on this at the moment. There's a network fee of about $1.05 because this one is on Avalanche. If we want to reduce the fees, we can try Polygon, and we only pay 2%, 2 cents, okay? And we're still earning $12.99. Which one's best? I want to pay 2 cents. I don't want to pay $1 if I don't have to, right? See, you need to shop around like that, okay? And try to figure out, okay, what's the best place to invest, okay? And get the highest return at the lowest cost. So right now, the lowest cost is definitely on Polygon Network. And we're getting the same yield at $12.99 for USDC, which is a stable coin. So that fits in our portfolio strategy because we're beating inflation and we're using stable coins, okay? Now, as an added, PoolTogether has a lottery system, a no-loss lottery system. What does that mean? It means you don't have to pay to buy a lottery ticket on this and spend money, okay, to buy those lottery tickets and lose the money if you don't win, okay? What they're doing is that if you deposit money in their vaults, you're automatically entered to win the jackpot here, which is, it stands at $11,160 at the moment. So you're earning this no matter what, and maybe if you're lucky, you're going to win the jackpot. So they've got 1,011 prizes every single day. So you could win something, some in the lottery any day of the year if you've got enough luck. And it costs you nothing. It costs you nothing. You don't have to pay for those tickets. You're automatically entered. If you don't win, you don't lose. That's why it's called no-loss lottery. You're not losing anything if you don't win. Okay, and you're actually gaining 12.99%. It's pretty good. All right. What do you have here? Anything? I think these are the past draws or something. I don't know if they're gonna show or not. So that's today's date. In 5 hours, 39 minutes, they're going to give $11,160 in prizes. So they're gonna divide that and give it away. Okay, and these are the past, so this Monday, February 21st. So almost every day, this looks to me like they're giving the same amount, 11,160. So you have a chance to win here. Now, what's nice about this? First of all, as I said, it fits in our strategy. You're earning more, you can deposit stable coins, so you're preserving your capital. Number two, right now it says they advertise 12.99%, so you're beating inflation. Number three, it has a very excellent safety rating at right here at DeFi safety with 91%. So it covers all the bases. So I'm not doing any investment on this right now. Okay, I might do that in the future. Why? Because I'm very much interested in getting 12.99% because right now my stablecoins here are only earning 9.74. So I might take the money out of this here and put it right here because I'm earning several percent more. So that could be a good strategy for this week. So maybe I'm going to do that this week. I'm not going to do it during the video because it takes a long time. If I do it this week, then you're going to see the results of that next week. So stay tuned. All right, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. This way you know about the new video when I'm publishing it. And download the free book. All you have to do is put your name, your email address, hit the submit button, you get a big fat button that says download the free book. And if you miss that button, we're going to send you an email with another big fat button that says download the free book. And if you don't want to download the free book, that's okay. You just go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me a whole $1. See ya.